Hey guys, welcome back. In today's video, we are talking about AMC going up, running into the hundreds, the extremely discounted price, and many more in this video. First, we're taking a look at this. So AMC was up 9% on Friday with no major headline catalyst, while Cinemark and IMAX barely moved. So either the market suddenly discovered theaters exist or something's happening behind the scenes. Now, what you can see here is how AMC was up 9%, whereas Cinemark and IMAX was only up around 1.5%. Now, this isn't surprising in the fact that AMC is going up because we know that AMC has always been discounted. AMC's real price discovery is way higher than where we are at. In terms of the fact that it is surprising is the fact that we are not seeing AMC being suppressed, because in the past we've seen how, despite the positive news within the industry, Cinemark and IMAX are benefiting from it, but AMC doesn't. And so that is what's surprising. But when we take a look at what's actually going on right now, some of the reasonings could be this. Firstly, when we take a look at this, from box office theory, Q2 paced increase to target of $2.9 billion. So what this is right now is the projected box office to obviously grow even more, and this is for Q2. Now, then the same will be applied for Q3, Q4, and ultimately it talks about the future projections of the box office. We are only gonna see it get bigger and bigger. And so with a kind of news like this, with the fact that we are seeing the box office get bigger, and now we're seeing AMC being the ones that up the most within all of these companies, it feels like that people are finally realizing who the biggest company, who the biggest firm is within the industry, and the one that's going to benefit the most from the box office. We've already talked about the efficiency of the operational structure of AMC. We talked about the improvements. We talked about the future projections. And so now, as people see the fact that the theater industry is only going to get bigger, they are trying to look for the company that is going to grow the most from it, that is going to benefit the most from it, that is going to grasp the majority of the market share, and that is obviously AMC. And that's why we're seeing the 9.18%. Now, this is only one part of it, but it obviously talks about how people are seeing AMC as kind of the top number one within the industry right now. The other thing is the fact that people have been quietly accumulating. Previously, we saw how AMC was locked around the 156, 159 zone forever. And we saw that people like Adam Aaron were obviously buying into this, but other institutions were also trying to accumulate. And so it felt like that a lot of people were trying to buy as much AMC as possible without the price of AMC going up. This isn't because they don't want the price to go up. It's that during their time of accumulation, they don't want to increase the cost it would be to acquire shares of AMC. And so as soon as we see them acquire the required shares that they need, the amount that they are comfortable and happy with, it feels like they're allowing the market to go up. And so this is another understanding of not only is the demand of AMC there, but also talking about how the incentive and attractiveness of AMC is there. Now, of course, this is met with different things as well. We talk about people accumulating. This could be good or bad. The reason I say this is because if we are seeing executives buying, then that's obviously very good news. But if we're seeing the fact that they are just trying to suppress AMC because they still want retail to get out, then there's of course a hint of badness in that. But it doesn't take away from the fact that if people want AMC shares, it means they understand the future. We saw this for AMC and GME as well, and it's why we knew that there was certain manipulation / suppression going on within the scenes, because we were seeing AMC and GME having 0% movement at the end of day. And this is something that you don't actually often see for stocks, especially with stocks with such high volume. Yet for AMC, for GME, we constantly see that, and it just talks about what's actually going on behind the scenes. Furthermore, you can see another big reason for why AMC staying low is an extremely positive reason is because it isn't just the institutions who want to accumulate. Apes have always wanted to buy AMC shares, and it doesn't scare them away to see that AMC is ranging. You can see the more AMC theater stays at 156 share price, the more I can afford, the more I intend to continue to acquire. And this is pretty much the thought process with the majority of apes. And this is why I've said that The institutions have completely gone the wrong way with the fact that they are trying to suppress the price of AMC. They're trying to make sure that people are buying AMC, the price doesn't go up, because then they think that it will force people to sell because it feels like everyone's buying, yet they're not benefiting from it. But what they fail to realize is that it's actually doing the complete opposite. The more they suppress AMC, the more apes are going to go to buy. And it's why we've seen the illiquidity issue. It's why we're seeing that certain days when nothing is happening, AMC is able to jump up 10, 11% a day. It's because of what AMC is doing. It's because of what the short sellers have failed to realize and what the apes have been and will continue to do and pressure against these short sellers. And you can also see a year from now, you will deeply regret not buying a bit more when AMC share price was at 1 point, etc. If everyone holds 1,000 AMC shares, the price will go up. And this is what we talked about with how more and more people are starting to realize this. I'm not talking about the apes. The apes have always known where the true value of AMC should be going. But we're talking about institutions, we're talking about retail investors who aren't as informed about AMC as us. They all see where AMC is going right now. When we take a look at how institutions are buying, they've realized the opportunities. They've realized kind of what some of their fellow institutions have done that will allow AMC to go up into the hundreds, to go up into the thousands. But not only that, talk about how AMC is improving is fundamentally in terms of going up in price. Then for the retail, it's the same thing. More and more people right now are seeing what's going on. Apes have been making people aware of what's going on with AMC for the longest time. Some retail investors will see that. Some retail investors will also look for some of the best and safe investments and kind of the most undervalued and discounted investments. And when they look for that, companies like AMC are kind of the ones that are popping up at the forefront. And so this is how we're seeing that more and more people are buying in. And the further it stays at this price, to me, it feels like the further it's going to attract even more people. And so when you consider the vast amount of counterfeit shares that corrupt hedge funds and banks have been producing to leverage their short positions and keep price targeted companies suppressed, how on earth are they going to settle? And it's how we always know that there's been an illiquidity issue. When you take a look at the filings of some of these firms, when we take a look at the short positions they have opened, when you take a look at the margin requirements of certain companies, and we talked about this with UBS, we talked about this with Credit Suisse, you see that they are in a very, very deep position. And that's exactly why. And that's how we know that with them struggling with AMC, with them struggling with GME, with all of these FTDs, toxic swaps, all of these that are existing, it's going to come to a time where they have to pay for it. And that's when we are going to make them pay for it. And it's why we've said that the cheaper AMC is right now, the more it's going to attract people and the more that the short sellers will have to pay in the future. And another big thing we've seen recently, because as we talk about kind of all of these short positions, the synthetics, one of the things we've seen recently is that the reported short interest. You can say even if the reportable short interest was showing 0%, I still would believe there exists a heavy short because they don't have to report it, and it's the only thing that justifies an army of AMC influencers spreading FUD. Now, what we have been seeing is recently there was a report of AMC short interest, and it's shown that it has actually declined. Now, the biggest thing about this, and it's something I've always talked about as well in the past, is that firstly, at the end of the day, it is self-reported short data, and it doesn't include what they actually could be. Furthermore, it doesn't include offshore data as well. So already you're seeing how it's not representing an extremely accurate representation of what the short interest should be. Now, secondly, on top of this, with what we talked about, is that with indicators, we have seen how the synthetic short interest is 10 times, 20 times above the reported short interest. We've seen this with easy peasy trading. We've seen this with other various means of data as well. And recently, when we saw that short interest was reported to go down, what we actually saw was the total short synthetic interest to have gone up. So it just goes on to talk about how they're trying to give an image of they've covered their short positions, but actually behind the scenes, they are increasing even more. And regarding in terms of the short interest, remember that offshore is not reported by FINRA, so there's a reason to believe a rather extreme bet on AMC's demise was made and transferred offshore back in 2020. We talked about this firstly with the Brazilian ADR shares that Citi held of AMC. This is just one example of many, but it goes on to talk about how the short interest that we are looking at now is nowhere near what it should be. And a big reason for why more and more people are confident right now is that the bear thesis was built for a world where box office never recovered. Now, we have just seen how AMC posted the highest attended weekend of 2026. We are seeing how movies are being released and doing extremely well. So that's how we know that AMC is going to grow. We can see through 57 days, the domestic box office claws back up to third all time. So we are still going to see it grow. We are still only going to see it get bigger, and we're going to see AMC profit a lot from this. And a big reason for this is because when you take a look at why this is important, you can see here, record admission revenue per patron, record food and beverages per patron, record total revenue per patron. So this is what we talked about with efficiency. People may just think that, oh wow, it's good that AMC is seeing record attendance. What you have to realize is the revenue that it's bringing, but also how it's completely different than even 3 months ago. Because how we are seeing the revenue per patron to increase quarter by quarter, potentially even month by month, depending on what we're doing, you have to understand the difference there is. So if we are seeing record attendance happening, you have to understand how that's going to also equate to record revenue. And so with that, you can see and expect the AMC revenue to increase even more than we possibly think, and also kind of the profit to go along with it. And so we see AMC is extremely undervalued is really all you need to know. Like I've said, this pretty much sums up kind of the mindset of the majority of the apes, and is why we are able to cause illiquidity problems for the short sellers. And so with Adam Aaron right now, especially with how he's been operating AMC, positioning AMC, you can understand how we are only going to get even bigger. Furthermore, people thought AMC was worthless, but with everything we just talked about right now, you have to understand where we are at. We're still adapting, improving, and bringing millions of people together on the big screen. And we've already talked about this. Not only is the box office to get bigger, it's projected to go even better than we are expecting. On top of that, we're seeing how AMC is then also expecting to see growth in terms of efficiency, not just benefiting from the box office, but getting the majority of the market share of the box office. And that's what's most important. And when you take a look at analysis, you can see even with AI, they're just talking about how undervalued AMC is, how discounted it is, and even in terms of the short-term price target of where AMC could go to. Now, this is not financial advice. As always, again, take what I say grain of salt, make sure you do your own due diligence and research, but you can see why the attractiveness for AMC is at all-time high. And this is why we've been seeing the market makers struggling with pushing AMC down. We're seeing how these 150 calls are constantly going in the money right now. This is something we've talked about in the past. We talked about the trade opportunities, and this is how short sellers are facing kind of the gamma exposure right now. Is why we're seeing AMC go up, is why we're seeing more volume coming in, because of everything that's ongoing. And another thing that could be related is recently we're seeing BlackBerry running, and this is something that I've mentioned in the past. Now, the thing that's interesting about this is that BlackBerry is going up for various amounts of reasons. Now, you could obviously talk about it's benefiting from the correlation of what we've seen with Nokia, but also we've understood the history of BlackBerry. And so as we're seeing BlackBerry run right now, and we see AMC also run, it feels like the correlation is coming more towards the fact that the quote-unquote meme basket is once again seeing that margin volatility. And a big thing we still have to realize is the off exchange is still extremely high, but you can see how even during the high dark pool volume, we're still able to see AMC run. Furthermore, we're still seeing the GameStop kind of increasing their market share, increasing their stake in eBay. I still think that this is something we need to keep a close eye on, because it feels like this is their short-term ultimate goal. And it's something that, if done well, if according to what they're claiming to be, it could be extremely, extremely powerful for GME. Another big thing is how we're seeing Citadel, Virtue, Anton are trying to block the bankruptcy trustee subpoenas, seeking trading data tied to MMAT, TRCH, MMTLP. And it kind of just goes on to talk about how This is why we know that there's manipulation and they are afraid to show it. And it's why we know that eventually everything is going to get burned down because they won't be able to hold it. Because when you take a look at what's going on right now for the banks, look at the big hole that they dug, $400 billion losses. But on paper, they're reporting a positive net income. That's because they are not closing the positions that are in the losses, so they don't have to actually report it. It kind of just goes on to talk about what we've said with the loophole with self-reporting and everything. Now, as always, this is F Financial Advisor. Do take out to go. Make sure you do your own due diligence and research, and I'll catch you guys next time.